Hello, this is Dan Beniak. I'm back here with my colleague Sal Martone for another edition of our look back on the month that was in markets. This time we'll be looking at the equity markets in particular. Sal, can you kick us off?
Yeah, overall, the economy is doing fairly well. It's holding up nicely, showing a lot of resilience. I mean, we had the GDP now indicator for the third quarter coming up, and it's running above 2%. So you've got, solid growth. You've got inflation that has remained higher but steady. We got Powell that came out at Jackson Hole saying that they're going to look through the recent spike or increase in inflation. And they're preparing the markets for a 25 basis point rate cut um, coming up in this year, and it'll probably be followed by a couple of more. So you could get 50 to 75 basis point cuts this year. Overall, that's a pretty good environment to own stocks. You got,
Especially since job growth
yeah,
is still positive.
job growth is still positive. You did get some negative revisions, but the offsetting mechanism for that is that the Fed comes in and supports economic activity with lower rates. So you got this natural balance. So that's good to see. But it's a good environment to own stocks when you've got inflation that's stabilizing, you've got Fed cuts, you've got deregulation, and then you've also got this AI data center secular build out that doesn't seem like it's gonna slow down at all. Dan, it was interesting. I was looking at historically when you've had these large capex build outs, they've been funded by non-investment grade companies. You had
Mhm.
the airlines in the 80s, you had telecom in the 90s, then you had the energy shale boom. Those are all funded by sub-investment grade companies.
Which is not the case this time.
Not the case this time. You've got the AI data centers that's being funded by these large, massive tech companies that in some cases they have more cash, Dan, than they do debt.
They print money.
They do. They really do. So, overall, valuations are elevated, but I don't think that's a reason to be worried in the near term for stocks. I think this investment cycle has more legs, and there's reasons to be optimistic.
And the markets agreed with you so far, Sal. We're at or near all-time highs in all the major indices, and in particular, these mega cap tech stocks. They continue to lead the way with growing market share. So it's an interesting environment. It's a story we've told before, but we see no reason to change our tune on it. So thank you for joining us. Please watch out for our next video, which is going to focus on what we've seen in fixed income markets. Stay tuned, and thank you very much.